What's up? What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you are in the market and not trying to time the market because that's simply impossible to do. Almost forgot what I was going to say. I'm trying to cool down because I just got dressed for work. The market just closed a few minutes ago. So we're going to see what's going on. Again, hopefully you guys are investing. You're taking advantage of this time that we have, that we're able to invest in the stock market because you have a stable job, you have a job, you're budgeting, you have no debt, so you're having your money work for you, and you do that by investing into appreciating assets. If you don't invest your money, you're not going to make any money. I don't know when people are going to realize that hard work will not make you wealthy. Although you don't have to have millions of dollars to be wealthy at all, right? As long as you have your health, you have everything that you need, you have no worries, that is wealth. But a lot of people are not there. Are you saving? Are you out of debt? Are you making the most of your money? Are you living below your means while you're young? Are you disciplined? Are you making sacrifices? Are you delaying your gratification now, not spending your money on expensive cars or homes that you can't afford, or clothes, or these trips just to post photos on social media to pretend to be something you're not, right? Hold on, let me lift this camera up a little bit. Okay. All right. Okay. So, what happened in the stock market today? It says, I haven't read it until now, right? It says the S&P 500 crosses 6,800. Wow. Joining Dow. NASDAQ in fresh records as U.S.-China trade deal hopes run high. And you also know the Feds are meeting this week as well. So what if there's an interest rate cut? And the market's doing pretty well. I mean, the S&P 500 crosses over 6,800 for the first time. I've told you guys the safest thing for any of you to invest in is the S&P 500. The S&P 500 consists of the 500 largest companies in the United States that are doing well, that has, market value at least over $100 billion. Do your research, right? So these are companies that are doing very well. And the S&P 500 is up over 15% this year. So don't stress yourself out by trying to figure out which individual stock you need to invest in. Do you need to invest in, Roblox, whatever that may be, right? Or you need to invest in Johnson & Johnson, just that one company. I would say that is not smart investing, having all of your money in one single stock. Remember that story, Enron? If you don't, just Google it, where that one company, the guy was embezzling the money, the head of the company, and the company went under, and so many people lost all of their retirement savings because all of their money was tied up into that one company. So that is not safe. So have your money and your investment diversified, and you're diversified in the S&P 500. And the managers of those S&P 500s, like SPLG, like Fidelity, like Vanguard, VOO, those people within those companies are managing the stocks within that fund. You don't have to do the work yourself. So, okay, let's get into what happened today in the market. It says U.S. stocks climbed to fresh records on Monday amid promising signs that a U.S.-China trade deal would cap President Trump's long-awaited meeting with Chinese President Xi later this week. The Dow moved roughly 0.7% higher, while the S&P 500 moved 1.2%. Now, think about this. Normally, when I talk about the S&P 500 moving up, it's like 0.5, 0.6, 0.7%. But today, it moved 1.2%, and that's major. Major. And the NASDAQ is up 1.9%. And the NASDAQ is made up of, tech-heavy stocks, or made up of tech, right? Like the Nvidias, the Broadcoms, the Apple, the Microsoft, the Googles, the Amazons. You get it, right? So they probably did pretty well today. So Wall Street is in an upbeat mood as it gears up for a pivotal week featuring the Federal Reserve interest rate decision and a barrage of big tech earnings, as well as Thursday's high stakes meeting between Trump and Z. Hopefully, everything goes well. The optimism, I'm optimistic, follows a banner week that saw all three major indexes close at all-time highs on Friday. So that means if these things are closing at all-time highs and things spiked up today, you're missing out on gains. I guarantee you there were a lot of people that took money out of the market because their stocks just exploded today. You know, some people do that. I haven't done that yet this year. Have I done that this year? No. Last year I did sell things. I did sell some stocks to buy more individual stocks. And then I lowered my portfolio, or I had too many stocks in my portfolio. And I didn't like the fact that I was only buying 1 and 2 of each stock because I didn't have like a ton of money to invest. And I've learned the more stocks and shares you own of a company, the more money you can make, especially when it goes up in value. So I had to cut my portfolio pretty much in half because I had way too many stocks. But either way, that was the last time I sold anything. So it says here, the optimism followed a banner week that saw major three and close, okay, at an all-time high on Friday. So stocks are eyeing further records after U.S. and China officials signal that weekend talks have paved the way for a breakthrough in the trade standoff. I think we have a very successful framework for the leaders to discuss on Thursday, Treasury Secretary Scott Bessent told reporters on Sunday. At the same time, Beijing held a preliminary census on resolving key issues, helping ease trade war worries sparked by recent heightened tensions. I've got a lot of respect for President Xi, and I think we're going to come away with a deal, Trump told reporters on Air Force One en route to Japan and Malaysia. Meanwhile, markets are all but certain the Fed will cut rates on Wednesday when policymakers wrap up their two-day meeting. Cooler than expected inflation data, the U.S. shutdown delayed consumer price index report bolstered the case for easing on Friday. Yeah, we're still not getting paid. I'm still going into work. See how dedicated I am. Anyway, that decision lands alongside another big potential catalyst, the arrival of quarterly earnings from the Magnificent Seven tech megacaps: Microsoft, Google, Meta, set to report third quarter results on Wednesday, with Apple and Amazon scheduled a day later. That is going to be major because most people are looking at how is AI helping these companies grow. And if they report big earnings, that's going to be great. If they miss, we'll see what happens. But we're going to see, because these companies are spending billions and billions of dollars into AI, into the technology, and these chips that they're buying from NVIDIA. So, in one other notable corporate move, Qualcomm shares soared, as much as 20%? What? As the company announced it will accelerate its data center push with new chips, putting it in direct competition with the likes of NVIDIA and AMD. Okay, Qualcomm, I'm not mad at you. Oh, wow, yeah, they went up $18. Damn. And I was thinking about buying this company. Well, I still can, but wow, that was a nice little jump. But you can't invest in everything. And that's one thing that I continue to tell myself. You can't invest in everything. So, yeah, that's it for the news, people. So let's see what happened with some stocks. NVIDIA. What happened with NVIDIA? Oh, wow. NVIDIA gained $5.23 today, closing out at $191.49. Wow. Do you know year to date, Nvidia is up 42.59%. Palantir gained $4.55 today, closing out at $189.18. SPLG, my S&P 500 ETF, gained 94 cents today, closing out at $80.61. FTEC, wow, Information Technology ETF, gained $4.19 today, closing out at $234.80. Broadcom gained $7.92 today, closing out at $362.05. Tesla gained $18.70 today, closing out at $452.42. Did I miss anything? No, I think that's it. Stock market did pretty good today. I'm telling you, you need to invest, people. You can create generational wealth through investments. You have to give your money a purpose. If you don't give your money a purpose, if you don't have a purpose for your life, again, your money, you can't expect it to grow. I look at it as a spiritual thing. You have to create a plan. You have to create a plan, and you have to be optimistic. You have to visualize. Oh, you have to be, what did I say? Yeah, you have to be optimistic with your thinking, right? You can't think that you're going to invest your money and lose it all, because that's probably what's going to happen. If you think that you're going to invest and lose all your money, you've lost before you started. So you will lose all your money, because that means you probably would not invest smartly. So when you give your money direction, when you give your life direction, it flows that way, right? So you have to do that. Create a plan. Give your money a purpose. Visualize what you want it to do for you. Do it smartly. Be disciplined. Again, delayed gratification. Because what I've learned, when I was younger, I did not think about investing. However, I was a good saver. I thank God for that. I was a good saver. I did buy homes even when I did not understand and know that I was creating something. I just thought that it was smart for me to buy instead of paying rent when I was in the military, because my military pay was going to pay my rent. So, and then, I got stuck with renting those places after I left. I honestly did not know what I was doing. I remember a realtor telling me, it may be better for you to rent this condo, sir, because you haven't had it long enough. You may end up owing money if you close, and condo prices don't appreciate as much as a home. So she suggested that I rent, and I did, and that's how I became a landlord, by that, because of the information that was provided to me by this property manager, or this real estate agent, actually. And I rented that property with her company for like 12 years or more, right? Successfully. And I saw that it worked, and I continued to do that. So I had 3 homes up for rent at one time. I was building my 4th. I got rid of that. I got rid of 2 to build this one, and then I kept one. So now I only have 2 properties. And I'm writing an ebook. So hopefully I'll have that done soon. I've been working on it for like the last month, couple of weeks, trying to put it all together. I think I have a final product, but I'm going to go over it again this weekend before I do anything. But yeah, I wrote an ebook all about getting out of debt, telling my story, where I came from, how I ended up where I am at now, talking about investing and how important it is, and listening to a coworker only 5 years ago. And now I have hundreds of thousands of dollars in my portfolio because I listened to this guy about investing. And then I started doing my research. I started learning about how this works. And I'm thinking to myself, or I'm kicking myself, because I did not listen. before because I was young and hard-headed, and I didn't know what I didn't know. And because this wasn't something that was taught to me, and you know, as we get older, it's harder for us to listen and take advice, right? So now that I see how the stock market works, you know, my portfolio is up. I did check my portfolio. I just looked at the, I saw the market was up. I had all this green. I made a lot of money today. My portfolio is up 46%. 46%. If I want, 46%. I have a return on my investment, right? Where are you making, you're not making, you know, your job, and I've realized my job is not here to make me rich. My job will not make me rich. It's what I do with the money that my job pays me will make me rich. Well, not just rich, wealthy. Because wealth consists of many things. It can consist of money, family, friends, health. You know, it's caused me not to stress as much because I see my wealth increasing. It has made me focus more on my health, to stop eating certain things, to stop drinking certain things. So I'm making all these changes because I have a solid foundation under me. When you don't have a solid foundation under you, you know, your life can feel like it's a wreck. But it's a decision that you have to make, again, by creating a plan, and that plan is a budget. So get out of debt, people. It's no fun being in debt, in a ton of debt. And just because everyone else is unhealthy, just because everyone else is in debt, doesn't mean that you need to follow that bandwagon. Be the one person that goes the other direction, go down the other road or the other route. Stop following everyone else who's going nowhere. They look like they're having a lot of fun, but you can look like you're having a lot of fun. There's a lot of you who remember how great things were when you were younger, and now that you're older, it's like, WTF, what happened? And I see a lot of those people like, dag, what happened to that person? I remember they had so much light and so much potential when they were younger, but hey, they went down the wrong path. And a lot of people are going down the wrong path. So I'm going to end this video because right now I'm just babbling. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, wish me luck. Well, don't even wish me luck. Yeah, just let me know what you think. Comment on the video. Get out of debt, people. Let me know if you're getting out of debt. If you have been, the stocks that I talk about every day, any of you that are listening, if you were investing just into those stocks, your portfolio would be up 46% like mine is. The stocks that I talk about every day or go over, like the Palantir, the SPLG, the FTEC, the Broadcom, the Tesla, those are what I actually invest in. And had you been investing in the same, your portfolio would be up 46%, right? Or you would be up. If you had just invested into the safest thing, which I suggest for most newcomers, the S&P 500, your portfolio would be up 15.62%. That's good. That's great, people. So think if you had again, your portfolio would be up 15.62%. If you had just invested into the information technology ETF, which consists of about 300 information technology companies, that fund, your portfolio would be up 23.12%. You didn't even have to invest into the single stock, but just those two ETFs, you would be up. But let's say you left your money in your bank. How much is your bank giving you on your money? 0.5 or 0.05% or 0.025%? I don't know what banks give. But yeah, hopefully you get the point. Sorry, so you guys, disclaimer, I'm not a financial advisor, nor am I pretending to be one. Any and all information on my channel is for entertainment purposes and for, it's just for entertainment purposes only. So please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Have a blessed day. Peace.